You're watching Old and Broke. Welcome back to Old and Broke. Gold is on fire, silver is waking up, and central banks? They're hoarding bullion like winter is coming. But this isn't just another market move. Something bigger is unfolding beneath the surface. Something that affects you, your savings, your future. Let's break it all down. At this year's Berkshire Hathaway shareholder meeting, Warren Buffett announced his retirement at age 94. His calm but shaky voice declared that Greg Abel would take over as CEO by year-end. Most people saw it as a passing of the torch. But if you listened closely, Buffett wasn't just talking about leadership. He was talking about America's financial future. He warned that governments, including the US, have a natural tendency to debase their currency. He wasn't ranting. He was reflecting. This was a man who built a trillion-dollar empire, subtly telling us the dollar's in trouble. Buffett's remarks weren't about stocks. They were about systemic risk, about what happens when trust in the currency fades. Warren Buffett's father, Congressman Howard Buffett, was a hard money advocate. In 1948, he gave a famous speech warning that without honest, sound money, the United States would lose its freedom. He predicted that inflation would be used as a silent weapon, transferring wealth upward and eroding liberty. Unless we restore honest money, human freedom is at stake. Howard believed inflation wasn't just bad economics, it was moral rot. And now, 75 years later, his son is signaling the same decay, but with less urgency and more resignation. Gold prices have been surging globally. This isn't just because of inflation, though that's part of it. It's also about geopolitical tension. Trade wars, tariffs, sanctions, currency debasement. Central banks around the world are scrambling to insulate themselves from systemic shocks by increasing their gold reserves. In Japan and Australia, gold is already at record highs in local currencies. And this matters because central banks aren't speculators. They're guardians of financial systems. When they buy gold, it means they no longer trust the system they helped build. The gold-to-Dow ratio is a forgotten tool that compares stock market valuations to the price of gold. Historically, during periods of crisis, this ratio collapses in favor of gold. In the Great Depression, it went as low as 2-to-1. During the 1980 gold peak, it dropped again. Today, it takes about 12.75 ounces of gold to buy one share of the Dow. This suggests stocks are massively overvalued relative to gold. When that ratio flips, it usually means a financial reset is around the corner. Silver is gold's high volatility counterpart. It performs like gold, but often with sharper spikes and deeper crashes. In 1980 and 2011, silver skyrocketed. Right now, the silver-to-Dow ratio is historically stretched. It takes over 1,300 ounces of silver to buy a Dow share. In past cycles, that number has dropped below 100. And with rising industrial demand, especially from solar panels, silver's physical supply is getting tighter. Undervalued, underowned, understood by few. In the late 1990s, Warren Buffett shocked the commodities market by buying 130 million ounces of silver. It was such a large move that it caused lease rates to spike. But by 2006, Berkshire had offloaded all of it. Rumors swirled that the silver ended up being used to create the SLV ETF. Why did he sell? Some say it was due to legal entanglements involving AIG. Others believe Buffett was pressured to exit a position that gave him too much leverage in a market that needed to stay suppressed. His father fought for sound money. Warren quietly acted on that belief and then walked away. Let's talk property. Since the 2008 crisis, real estate in cities like Sydney, Melbourne, and even New York has gone parabolic. In fiat terms, homes are more expensive than ever. But in gold or silver terms, they're already falling. When priced in ounces instead of dollars, real estate is losing ground. Some analysts forecast that Australian homes could drop by 2/3 in gold terms. In silver terms, the drop could exceed 90%. You're not seeing it yet because fiat inflation masks it. But when the smoke clears, real assets will speak louder than appraisals. The US federal debt is now over $34 trillion. Add in unfunded liabilities and we're talking $200 trillion. Buffett said it clearly. There's a roughly 7% revenue expenditure gap, and it's growing. To make that up, politicians want more inflation, not less. Why? Because 50% inflation over 4 months could erase 90% of the debt in real terms. This is the quiet horror of currency debasement. It's not about economics, it's about survival. For the state, not for you. Globally, there's only about $330 billion worth of investable silver. That's peanuts in a world where individual tech stocks are worth trillions. And yet, silver is critical for electronics, solar panels, and industrial manufacturing. Supply is tight, demand is rising, investors are asleep. But when they wake up, silver could move fast. It has before. The old portfolio model, 60% stocks, 40% bonds, is failing. Since 2020, inflation has crushed both components. Meanwhile, gold has quietly outperformed them. Even FTSE Russell, a major financial institution, now suggests a new portfolio mix. 60% stocks, 20% bonds, 20% bullion. And honestly, that's still conservative. In chaotic periods, gold tends to become the main pillar, not a side dish. This isn't a doomsday prophecy, it's simple math. Every fiat currency in history has failed. The US dollar is no exception. It's just better managed. Until now. Gold and silver aren't speculative bets. They're reality checks. They account for inflation, for lies, for excess. They're honest, finite, and globally recognized. That's why central banks are buying them hand over fist. You don't have to be rich to hedge yourself. You just have to understand that what's coming isn't new. It's the oldest story in finance. The state overextends, it prints, it inflates, then it resets. And those who hold real assets, those with ounces, not digits, weather the storm. So tonight, ask yourself, what am I really holding? Because in the next chapter of this story, Old and Broke might just be the name of the fiat system, not you. You're watching Old and Broke. We don't predict the future, we just pay attention. Hit like, hit subscribe, stay sharp.